Oil has posted notable losses over the past 2 days as market expectations over supply and demand have somewhat worsened. Europe and the United States are typing into a recession. Both regions represent the largest consumer market in the world, which means that energy demand may decline significantly by the end of the year. Meanwhile, oil supply levels will likely stay the same, according to large investment banks, and will exceed demand. It seems that the market has been digesting these medium-term forecasts, and the future trajectory of the oil prices will now depend on the crude inventories in the United States. If they continue to decrease, oil will quickly return to $76 and $78 per barrel. In the meantime, Brent oil futures have approached the local low within the downward cycle, indicating persistent selling pressure. If the quote slips below 70 and stays there on the daily chart, this will signal the extension of the downtrend. Until then, a rebound is possible, just like it happened previously. Gold is holding near $1,960 per troy ounce. The precious metal was seen trading in a rather wide range between $1,940 and $1,980. A rapid change in the price direction is possible if the quote settles beyond one of the channel boundaries on the daily time frame. There are also some fundamental factors that can potentially push the price of gold to the level of $2,000 per troy ounce. US inflation data that is due out today may serve as a catalyst for the price rally. If consumer prices slow down to 4.3% from a 4.9%, markets may interpret this as a signal of an upcoming rate cut by the US Federal Reserve. Investors will quickly adjust their portfolios to add more instruments with the higher returns than that offered by the US dollar or US treasuries. As a rule, gold tends to gain value during such shifts as it's traditionally considered as a safe haven asset. Unfortunately, the US debt market is too large, and none of the instruments is able to offset the outflow of capital it has recently faced. Investors have to rebalance their portfolios and opt for other instruments, and thus facing certain risks. Gold is one of the most obvious choices, as it helps minimize risk exposure. As for the monetary policy of the Bank of Russia, it has left the key rate at the same level and announced a possible rate increase at the next meeting. Despite these statements, the ruble has depreciated on a sharp decline in the balance of payment surplus. This condition raises concerns over financial stability of the federal budget and forces large investors to increase their share of a foreign currency in their portfolios. At the same time, a weaker ruble may somewhat improve the situation with a balance of payments. Apparently, the Bank of Russia and the Ministry of Finance are determined to keep the ruble weak and may take some measures to do so. And they may also try to do this without any prior announcement. Therefore, the ruble is unlikely to recover in the near term. As we can see, the dollar-ruble pair is about to retest the local high within the current uptrend, and notably such an impressive rise in the United States dollar has already signaled its overbought status. However, if this move was the result of speculative trading, the technical signals it generated can well be ignored by market participants. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon.